You are in Japan, so I have to ask you kind of what you're hearing on the ground. Shinichiro here, did Japan or did they not intervene in the currency?
Yeah, so, and I think they did likely intervene in the FX markets, given the market moves and some of the BOJ reserve data indicating that. But, we haven't get the confirmation from them off. We'll get the data from the Ministry of Finance at the end of this month. But, I think intervention, likely happen. And, I think the concern thereof continues to weigh on the dollar yen, in the coming days as well.
Right, and we have the BOJ meeting this week, and I understand that you think that they won't do anything as far as their policy settings are concerned. So that takes me to the next question on the yen. How sustainable is the strategy to keep intervening? Because they do have reserves, they do have some money to keep doing that, but how long can they keep doing that?
Yeah, sure. Yeah, so, you're right. We do not expect the BOJ to change its policy, given that, they have previously said the FX not going to drive the policy, and and they continue to focus on the wage growth in Japan, which remains weak. So as some of the investors are seeming to be expecting some moves in the from the BOJ, I think the the post meeting reaction could be further yen weakness. But given the first intervention in September happened just after the BOJ when the yen depreciated quickly. So I think the intervention risk definitely remains on our radar, and which continues to weigh on the currency pair. But I think that the Ministry of Finance, the FX chief Kanda-san had said, they have basically unlimited amount of, ammo to, defend the currencies. It's not unlimited in a, numerical way, but they do have, quite a significant amount of reserves, which amounts to about 130 trillion yen, of which they used 3 trillion, in September, and maybe, 5 or so, according to some of the estimates at the latest round. But, they still have significant amount of the, ammunition to use. So I think, they have a good, ammo to defend it.
Shinichiro, I mean, nothing's going to change until you change some of the fundamentals there. You can intervene as much as you like, but the same things are there when you've done so. So is it high time that yield control was actually changed or even abandoned? I have no idea. What's your thinking on this?
Yeah, so, as I mentioned, we don't think the BOJ is going to change its policy this week, or at least through the end of Kuroda's term, which is April. As BOJ has definitely, it's starting to focus more on the wage growth, and Governor Kuroda have said, right, even if they move the yield curve control by 25 basis point, what does it do to dollar yen when the Fed is doing 75 like every meeting? So I think the prime tool of defending the currency is FX intervention and Ministry of Finance. And the Bank of Japan, I think, will likely continue its policy easing. But to your point, I think you're right that the BOJ could, or the Ministry of Finance could slow the pace of yen depreciation, but the ultimate direction of the currency is driven by the monetary policy differentials, which is driven more by the Fed. So the Fed policy is definitely the the driver of the dollar yen in the fundamental sense.
Okay, so I guess everyone's just trying to hold on as long as they can until maybe there's signs of the dollar peaking. I'm wondering, Shinichiro, when do you think the dollar can peak, and what is going to be that likely catalyst?
Yeah, so I think in terms of dollar yen, we talk about both the dollar and Japan's current account. We expect that the Fed to finish its hiking cycle in February next year at the 5.25%, and from there on, in the second half of next year, we do expect some cuts in the policy rate. So we could begin to see some sea change, directional change from the Fed, maybe in the first half of next year, and we could start to see some dollar peaking. But additionally, for the dollar yen, what's important is Japan's dynamics, especially the current account, because oil prices have come up from like 120 to 90 now. Japan reopened its borders, so that should start to improve the current account in Japan from currently it's like basically zero-ish to about plus 10 or so trillion yen into next year. So that should start to also put some upper pressure on the yen.